Jonathan Camarda, Chief Investment Officer. Hopefully you guys are doing well with the macro market update. And let's just start with the CPI number this week that came in cooler. And we had perhaps some short covering rally action going on where the market has ripped to the upside 2 days this week pretty nicely. Again, with the hopes that perhaps the Fed will ease its foot on the gas pedal with lighter inflation numbers. Now, the Fed has come out this week, as they popped up from various places, saying that they had to still be diligent on inflation and as such. So the debate of 50 basis points or 75 in the next meeting is still there. However, we did call recession back in June, and we saw that negative GDP number come out recently here for the back-to-back quarters, which defines a recession. And you see that in the yield curve as many of your strategies like active capital preservation, as well as global macro, as well as your sector and macro momentum and rotation strategies respectively. We have taken some positions in the longer term of the longer period yields with your bonds doing well there. Took some off the table as we had some decent gains. Now, what we're looking at as well is that we've had a pretty nice tide in technologies, biotechs, and a lot of aggressive stocks, like the ARC type stocks as well over the last several weeks, and you may have noticed that many of you have had those tucked into your strategies. Now, recently we've taken some of that money off the table, however, across the strategies, given the fact that we are running into some pretty steep resistance in the form of 250-day moving averages, in confluence with the fact that this is still a bull market rally within a bear market until it breaks out of that trend. So it's never a bad time, to quote old crazy Kramer, buddy Jimmy up there in New York, to take profits, right? It's always prudent. So you notice that we still continue to be positioned to take advantage of upside if it's there, but at the same time putting some more money in the proverbial satchel on the sidelines in case we do again start to see that next leg bleed lower. So in your strategies across, again, sector rotation, macro momentum, you'll see again a portion again taking off of the risk on side into cash and money market funds that'll pay you some yield there. And then on the other strategies like active capital preservation, more cash, and again less in the long-term bonds, which we took some profits in. Still have some exposure in the dollar, which still continues to be the strongest currency on the block globally. And then on your more aggressive equity strategies like global macro and velocity raptor, again we took some of the aggressive exposure off the table, but at the same time have still remained in some positions that we have some pretty attractive gains since late June and early July. So where the market goes right now, again, we have steep resistance, so a pullback would be expected. How deep? That is the question, right? Do we continue on the long, what they call capitulating leg of the bear market into a seasonally weak time of year, late August into September, October, or does the market muscle through, perhaps with some help of a more dovish Fed? Are you listening, Jim Bullard? Many aren't as worried about Powell, but that is the question. We are at a juxtaposition now where we shall see. But again, that's why we want to continue to be eternally vigilant, which we are. Again, if the actual risk appetite that you're looking at personally delineates, looks a little different than what's going on within your accounts and your sleeve or personal comfort level, certainly reach out to your private personal wealth advisors who will be more than happy to comb through again and make sure you're properly positioned for your situation, not only based upon our models. Because once again, we never forget you earned it. We're just privileged to manage it for you, and we never forget that. So again, we appreciate your time, your patience, and most importantly, your trust. Once again, your humble CIO, Jonathan Camarda. Until next time, stay frosty, stay cool. I don't know, it must be back to school season. There was a rhyme there somewhere, but I botched it, so I know my exit. Have a great one.